Hello traders, the title of the video is how to perform a deeper stock analysis without taking a side. Alright, the financial instrument that we are about to analyze is Under Armour Incorporation. The AP is UAA, Uniform Alpha Alpha, belonging to the consumer cyclical sector. Alright, so today we want to talk about how to perform a deeper stock analysis without taking a side. Alright, so there was an article by Jason Derrick at www.benzinga.com, BENZINGA, www.benzinga.com, an article by Jason Derrick. In that article, an analyst called Susan Anderson downgraded share of Under Armour. Now, so you can see that financial analyst Susan Anderson has downgraded Under Armour stock. All right, so does it mean that we should sell Under Armour stock because a financial analyst has downgraded that stock? All right, and one thing you need to understand that when a financial analyst downgraded or upgrade a stock, they put their reputation under pressure, because if they keep giving wrong information to the market, their reputation may be tarnished. All right, so they do a lot of work before they will come out and say they downgraded, they are downgrading a specific stock, and they do a lot of work before they will come out and say that, all right, we are upgrading this stock. So in this case, Susan Anderson, a financial analyst, all right, I'm not myself a financial analyst, all right, so has downgraded Under Armour stock from perform to underperform, with a price target slashed from $20 to $14. Right? So downgraded it to $14. So let's put that $14 on our chart. All right. So you remember the title of the video, how to perform a deeper stock analysis. So what we are trying to do here, a financial analyst, all right, has downgraded a particular stock. All right, does it mean that we, as a technical trader, we should sell straight away? Or does it mean that anybody out there should just go and sell the stock because, financial analyst has downgraded that stock? Okay, this is about a deeper, stock analysis without taking a side. So we don't want to take the side of the financial analyst straight away. All right, we will acknowledge, doesn't mean that we discount it, but we acknowledge the information because those are experienced financial market participants. We will acknowledge the fact that they downgraded or they have upgraded that stock. But now, as a technical trader, we'll take the next step to do our own due diligence. This is the best approach, to perform a deeper stock analysis without taking a side. All right. So, let's go a little bit deeper. So, Anderson, all right, downgraded follows recent check, proprietary surveys, and current trends that all point to continuous sale and margin pressure for Under Armour. So there is a bit of pressure. So for me personally, when I hear the word pressure, that a financial company is under pressure, I quickly check Google, perform Google Asset test. I will not go into that today, but one of the steps that we can take when we want to perform a deeper stock analysis. So they say they have downgraded that stock. Let's see whether that stock has passed the Google Asset test. If that stock has passed the Google Asset test, is it overbought? So a stock may pass the Google Asset test, but may be overbought. So if it passed the Google Asset test, but it is overbought, it will become a candidate for a bearish watch list. All right. All right. And on the other hand, if a stock has failed the Google Asset test, but is oversold, all right, we will put it on our bullish watch list. But we need to understand why the stock has failed the Google Asset test. Is there any change that is taking place? So always it's about turning from bearish to bullish, that's the time to buy, or turning from bullish to bearish, that's the time to sell. So continuing with this subject of Under Armour. By the way, Under Armour, they make beautiful, high quality t-shirt and shoes. All right, so you may check it out. All right, if you are in a kind of you like to be stylish. All right. So most notably, the analyst sees a price war with Nike. You don't want to get into fight with Nike. All right, very, very competitive, and they have a lot of liquidity, all right, to compete you at all levels. But Under Armour is under pressure, so your Under Armour is under pressure from Nike. So they pick for Nike. So trader who want to know, I did a beautiful stock analysis about Nike. I think I put it at 24aliawave.com when I was talking about the secret of whatever, blah blah blah. Check it out. So it's under pressure from Nike. So this is what we are telling traders. So a deeper stock analysis, we say one step, okay, Google Asset test. Now competitors. So if you go to Google Finance, all right, you will see that okay, you will see okay a page. They say when, like for instance, you put the epic of Under Armour at Google Finance UAA. All right, let's go there. All right. Let's go to Google Finance, my friend. You have time? Some traders say, Joe, you wasted too much time. Your video is too long. Joe, please understand. Okay, I understand. Okay, I understand. Okay, now let's go to Google Finance. This is Google Finance. Okay, so you need to check if you want to perform, okay, a deeper stock analysis. Use Google Finance and Yahoo Finance, okay? So this is Under Armour stock. So what I'm talking about here, talking about a competition-related company belonging to this. That's why I click on it right now. You see that Nike is here, okay? You see Nike. There's another company here called Cooperation, all right? You need to understand Colombian Sportwear, Quicksilver, and so on, blah, blah, blah. Nest was not doing very well recently. So those are related companies, so competition, all right? So Nike is putting, okay, Under Armour under, okay, pressure, all right? So let's go back to our chart. You want to check so Google Asset test, check the management. Sometimes a change of management will create a bullish sentiment for a financial instrument. Have you seen that? Some directors have a high reputation, and once they go into a company, they turn things around. And investors follow, not the company, but they follow some directors. All right? So a company may be doing so badly, everybody say, wow, they're going to be out of business. And a director may turn up with a lot of experience and will change completely, all right, the future of that company, all right? So you want to go through those things. So now we know what is happening. So to summarize quickly, the blah, blah, blah from, okay, in fact, the article, I need to tell you the source of this article is from www.benziga.com, article written by Jason Derrick, right, talking about analyst Susan Anderson downgrading Under Armour stock from market perform to underperform, slashing the price of Under Armour from $20 to $14. On my chart, I put here the level of $14. Now, you have to look carefully, my friend, why they choose $14. So you are I've started recording a video. I posted one video yesterday. Now, in fact, today, know what Goldman Sachs has got to do with this stock analysis. Check it out. So, now, in that video, Goldman Sachs was upgrading Caterpillar stock, and it shows a specific price level. Why? So you can see that $14, look carefully on our chart, you are technical trader, is corresponding to a key level. Just look at that resistance level there. So price went up there and then pulled back. It's a resistance level, it's a key level. Price breaks a bow, zoom into it. Traders say, Joyce, sometimes I can see it. I remember that. Okay, so let's zoom into it more. Don't want to annoy a trader. So it breaks above it and then retest it here. That's a key level. So it's not by mistake, okay, that analysts, because most of the analysts, financial analysts, are fundamental market participants. Okay, they are fundamental analysts. But the smartest market analysts also use, okay, technical analysis. They use area wave, they use fractal, plus their technical analysis to give, okay, timely, okay, recommendation to their clients. powerful. So here it is. So now you understand why they choose the level of 14. They don't choose it by mistake. So for us that understand a little bit more about Elliott wave and market cycle, we know that there was a trend. And that trend has started in 2009. Okay. Here it is. A bullish trend for Under Armour. So it has been going on for some time. But the stock was going down before they give the downgrade. Now, so personally, I look at this. I'm not interested to sell this stock at this point in time. Why? So talking about a deeper stock analysis doesn't mean that the stock cannot go down. It doesn't mean that the analyst is wrong. All right. But the reason why I myself personally, not you, all right, will not be excited to sell the stock at this stage is because it has been going down for some time. So this article was written 3 days ago. So today is the 6th of April 2017. All right, so 3 days ago, 3rd of April. Have been going down for some time. So a correction was underway for some time. There is a possibility, without going too far, that this stock may bounce up a bit after this long move down. There will be a little, you see, a deep breath in, a smaller breath out. So here it is. Breathe in, breathe out. The stock will do exactly the same. It's a high possibility that we may see a bit of bounce. That bounce will try to acknowledge that support level here. You see this level here? That's a possibility. Don't take it like it's exactly what's going to happen. I'm speaking to new traders, all right? Don't take it that way. A possibility that before he may try to seek, okay, that support level, $14, even probably go a little bit below it to seek a better support level below that 14 level in a zone of $12. Now, if you are a director of Under Armour, understand that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell Under Armour. And personally, at this stage, myself, I will not sell Under Armour. All right, so there's a possibility that the stock may go gently and reach the target that the analyst, okay, Susan Anderson, is forecasting. All right, but you have to understand what has happened before. There was a bullish trend. A correction is underway, which is, some traders say it's bearish, blah, blah, blah. But it's amazing sometimes. You will see a stock, people are bullish, they like the stock, they buy, they buy it, all right? The smartest, okay, market participant usually use the 5 times the book value of the stock. Some stock can exceed that 5 times if they are still creating more value, added value. So it doesn't mean because the stock has achieved 5 times its book value that is completely theoretically, okay, overbought. But if they continue to gain more market share, creating more value, their book value is likely to increase. So again, if the book value is $50, and we say times 5, $250 maximum overbought, if their book value changes from, if they are creating more value, you understand, to $60 instead of 50, therefore, all right, we will do 60 times, okay, 5. Now that will be, okay, $300 zone. Now this is not an exact time. This is a guide that a lot of smart market participants are watching because they don't want to pay. So for a particular stock, okay, 5 times the book value. But they may buy another stock at that level if they think that, okay, there are more value that could be added to that, okay, company, all right? So here it is. The target is $14 according to the market analyst Susan Anderson. All right. Now, for us technical trader, we will perform what we call a deeper stock analysis, starting from Google Assist test. All right. And then we want to see, is the stock itself oversold? Okay. There are more things we can do. For me personally, I can check also the first long-term equilibrium price level for this stock. All right. So the price, I can tell you now, right now, is below its first long-term equilibrium price level. It's below it. But Because when traders, for us technical traders, area weight traders, if the financial instrument, you see, there was a bullish trend and start going down, the level that a lot of people prefer to buy is between the 50% and the 61.8% Fibonacci retracement level of the prior trend. All right, now here we are talking about a deeper stock analysis. Now we are using Fibonacci retracement. We are using Google Assist test. We are talking about market share. We are talking about management. We are talking about fair value. Okay, being overbought at 5 times its book value. Okay, this is all in the pudding, so to speak. All right. All right. So now here it is. This is the zone where people tend to buy. All right. So a lot of people, so now you see that this level here, that I'm telling you that there's a high chance that it will bounce up a bit because of those orders here. But you see how this one pierces through it. So it pierces through the 50%, can you see? Zoom into it more. See the 50% and 61.8 zone. Look at this one. There was no demand at all in that zone. It just went through it like, phew, what's going on? Now, the question that I asked is a very important question. What's going on? Nobody bought it here. Strange. Now, if you ask that question, which is, okay, a relevant question, you need to go to Google Finance, check the economy news, all right? What's going on with the news with Under Armour? All right. In that article that I was quoting to you from benziga.com, we know now that one of the reasons why Susan Anderson has downgraded his stock is because of the competition. Okay, most notably, the analyst sees a price war with Nike. So both companies, all right, are making shoes, sport shoes. All right, they are making, all right, high quality, okay, t-shirt. So now Under Armour, another competitor to Nike, is under pressure from Nike. It's a price war. So probably Nike is slashing the cost of their items. And if Under Armour cannot afford to cut their costs, the price of their goods, they are under pressure. All right. And if that pressure continues, the price may go down more to the zone of $14. So now, as I show you now, technically speaking, talking about a deeper stock analysis, we see that there, look at that. How come this is the zone where people tend to buy? So usually you see some people try to buy, the price will bounce a bit here to acknowledge that zone before, if it's going to go down, it continue to go down. But look, it just went through it like a hole. So something is going on. Now we know one of the reasons, all right, is competition, price war between Nike and Under Armour. You see, will he manage to bounce up a bit to retain that support level in a zone of $24 before heading towards the $14? All right. Again, so this is one observation for us as a technical traders. Strange. All right. If you continue to go down more, you see the $14 is also, if you look carefully on my chart, I'm sorry guys, look carefully. You can see that I have here the 78% Fibonacci retracement level. That's the dotted line, a little bit below the red line. So that zone of $14, you have to understand, is corresponding which Susan Anderson was forecasting, was slashing the price of Under Armour from $20 to $14. It's also quite close to the 78% Fibonacci retracement level. Now you have to understand that those market analysts also use Fibonacci retracement and Fibonacci extensions. So probably she had drawn her Fibonacci retracement and she noticed that the $14 is near that 78% because you see, I use exactly 78. Probably she was using the 78.6%, which will be near the $14 price target zone. Do you want to become a financial analyst? If you answer yes, then you have to master fundamental analysis and the technical analysis and be able to combine the fundamental analysis and the technical analysis. So a price war between Under Armour and Nike is a bearish fundamental analysis if Under Armour cannot cope with the competition. Will they come up with a different strategy to compete with Nike probably they will not sit down and just wait. All right. So price war, they gain their competitors. They will try to cut, their losses and make it work beautifully for them. Again, looking on my chart, you'll see that I have CCI period 14 on my chart. The CCI is well oversold. It's now in the zone of 200 level. Recently, my friend, I recorded one beautiful video. What's the name of that video that I posted at dayprotraders.com? I think that the subscribers at dayprotraders.com are a little bit tired, so I'll give them a bit of break before we continue to post more video there. Well, where are we? Stock trader. Probably that video is stock trader. Stock is the title of the video was stock markets, cool stock market trading and investing tips and tricks. All right, check it out. Okay, stock market, cool stock market trading and investing tips and tricks. All right, so check it out and see that strategy of the CCI. So the CCI is now oversold, well oversold in the level of 200, and for that strategy, if the price close above that level of $24, let's call it now into pink, so you can see $24. So what I'm saying here, if under Armour we see a bullish candlestick bar on a monthly chart, closing just a little bit above that pink line, which is the $24, because the CCI is turning and the price is also after dipping below the $24, if it close above that $24, that will be an invitation to buy. All right, this is about that video, about the title of that video, stock market, cool stock market trading and investing tips and tricks. Now, as I told traders at the beginning of this video, when you are building a YouTube channel, all right, it's not like before when things start running nicely. It's quite challenging now to have a new channel on YouTube. And we have to put in a lot of work before we see the fruit of our hard work. Now, what I've said to traders, I'll stick to it. I say the 24 Stock Trader YouTube channel is going to be amazing YouTube channel. Therefore, subscribe and stay put. All right. So this is it. I hope I've said enough. So we see, technically speaking, the CCI is oversold. The price peaks to the sweet spot zone between the 50% and 61.8 zone. The price, one more thing we can see, talking about deeper stock analysis, the price still in a declining channel. So Susan Anderson, the market analyst, she has a good reason to be bearish because the market pattern is bearish. All right, so priority to bearish signal as long as we are stuck in a bearish channel, and the bearish channel is indicating to us that the sentiment is still bearish. It will start turning from bearish to bullish if the price manages to escape the bearish channel. All right. So one more time, we're using market geometry here. You can see that as the price is out of that channel, we'll project that channel in the direction of the price. So here we are. So we're projecting that channel here. Okay, here we are in this zone. And now we have a new channel. And as always, when we have a new channel using the market geometry, so you see, a deeper stock analysis will involve also Fibonacci retracement, market geometry, fundamental analysis without taking side. So here is the media line of our channel. That's where the price is sitting at the moment, so to speak. Will it bounce up, as I said, to return the $24 zone before coming down, or will it bounce up and continue to go up and close above that $24, which will be an invitation to buy with a caution because the price will still be in that declining channel, the first declining channel. All right. So this is about how to perform a deeper stock analysis without taking side. Why taking side? So usually a lot of market participants, ordinary market participants, all right, who are not sophisticated market participants, not because they are stupid, but because they haven't had the experience or the education of active market participant. All right. So market analysts, they are very experienced, and they have a lot of experience in the market. So they come out, they say to ordinary people, this stock is likely to go down, and the price target is $14. Now, a lot of market participants who do not know how to handle those information, we just go and sell. Sometimes they are rewarded, sometimes they are punished because they forget what we call market timing and buying and selling at a specific price. By performing a deeper stock analysis, one will use those information provided by the market analyst more efficiently. All right. This is the end of this tutorial about how to perform a deeper stock analysis without taking side. In this case, we don't want to take the side of Susan Anderson. Okay. My apologies, traders. My phone is ringing. I will stop it now. All right. We don't want to take the side of that. Okay. Apology to traders. One more time. My phone is next to me ringing. My apology to traders. So we don't want to take the side of the market analyst. We will acknowledge the information, all right, but we will perform a deeper stock analysis before we will make a valid trading or investing decision. Have any question or suggestion? Put in the comment section, and in due course I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon. We are the TSTW24 traders.